Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on the total number of green, yellow and red star respectively, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 14th March 2017 data as reference. In this video, we are going to review fund name Axis Long Term Equity Fund, which is a ELSS fund. Before going into review, let's understand about fund's objectives. The fund invests primarily in equities and equity related instruments. Fund invests in diversified equity portfolio and has a large cap bias with about 65% allocation in them. The fund has bottom up stock picking strategy. It means the fund picks individual shares irrespective of their sectors and hence never focuses on any sector. It enables investor to avail tax deduction from total income as permitted under Section 80C of Income Tax Act. Now let's start the detailed review on each parameter. First, the fund belongs to Axis Mutual Fund House family, which is currently India's 11th biggest fund house in terms of asset under management out of more than 45 fund houses and was established only 8 years ago. 75% of their current AUM is invested in top 3 of their schemes, that is Axis Liquid, Axis Long Term Equity, which we are discussing here, and Axis Short Term Fund. Axis Bank is major shareholder and fund house has achieved very good growth rate, but still due to lack of enough experience, not part of top 10 ranking and majority AUM focused on only 3 schemes, we give a yellow star here. Long-term equity fund was launched in December 2009, which means it is active for little over 7 years and it has not seen 2008-2009 economic downturn. So let's give a yellow star here too for not being too experienced as compared to others in the category. Fund is categorized in ELSS category as it gives Section 80C tax deductions for investing and has 3-year lock-in. Now moving to next, this fund has a AUM of more than 11,000 crores and is the biggest ELSS fund, that is tax saving fund in the category. This fund is the flagship equity fund of Axis Fund House. Such high AUM in such short time shows high investors' trust in the fund, its performance and stability of the fund. So definitely deserves a green star on this parameter. Now let's talk about the moolah, that is the returns. We will first talk about the trailing returns from 14th March date and then talk about the calendar returns. In trailing returns, we can see the fund has given very good returns in long term and except for last 1 year, it has consistently beaten its benchmark, that is BSE 200, and has also beaten the category average returns across 3 years, 5 years and 7 years period. This according to us is a very good performance given the fund is relatively new and was a late entrant, and these returns could be a factor for such a large AUM in such short time. Now looking at calendarized returns of last 7 years, which means returns from 1st Jan to 31st December of the calendar year, we see that there has only been one instance when fund was beaten by both benchmark and category, and that was in 2016. And for rest, the fund has beaten both category and benchmark 6 times in last 7 years. Their last year performance is little worrying as they were beaten by both category and benchmark comprehensively. But we would like to give them benefit of doubt as ELSS funds should be looked from long-term performances only. And probably last year was just a small blip in overall a great returns story. So we will give them 2 green stars for their performance. Next important parameter is fund manager. Long-term equity fund of Axis Mutual Fund has been in hands of Jinesh Gopani since almost 6 years now. Jinesh is a BCom and MMS grad and has been part of fund house since their inception, so has spent decent enough time with the fund and fund house. Jinesh is currently the head of equity for the Axis Mutual Fund House and also leads Axis Income Saver Fund, which is debt oriented hybrid fund since September 2013. But this fund is a below average performing debt oriented fund. Jinesh also has started managing Axis Focus 25 fund since last year June 2016. As we have seen, Jinesh has given pretty good returns with long-term equity fund and would definitely be his focus given the size of the fund, and also has been pretty stable with the fund with almost 6 years of management. But there are two red flags in overall a great performance. One is recent last year bad performance of the long-term equity fund, and second is below average performance of the other fund Jinesh is managing. These two red flags shifts our rating from a green to yellow star on this parameter. Next parameter is top stock holdings of the fund and understanding the fund's diversification. As on 14th March, fund has 40 stocks in the portfolio with top 5 contributing more than 30%. Cash allocation is less than 7%. Fund has decent diversification in portfolio, but weightage of top 5 companies is little higher than our internal benchmark of 25%, and hence we give this parameter a yellow star too. Next parameter is sector diversification. Fund's top 3 sector has weightage of more than 60% and is very overweight on financial sector with more than 35% allocation. So for this overweight allocation, we give them a yellow star here too. Next parameter is expenses. Expense ratio of this fund is 1.98%, which is significantly lower than the average expense ratio range of ELSS funds, which is around 2.5%. So you directly save 0.5% here. So this parameter definitely deserves a green star. For those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is less than benchmark and category, which means it takes lesser risk than both. Beta 2 is a measure of risk and is again lower than the category. Alpha, which measures the risk adjusted returns. So 11.2 alpha here means it can perform 11.2% better than the benchmark. And amazingly, even though it is taking lower risk, it still shows better alpha than the category, which is a huge positive. Last is P ratio of the portfolio, which is 29.8 as compared to benchmark BSE 200 index of 24.7. This parameter is little worrying since high P shows lesser likely return than benchmark. But this could be due to higher allocation to finance and energy sectors, as we have discussed, which typically have higher P than the average. Higher alpha with lower risk is big thumbs up for the fund, but investment into higher PE stocks is little negative, but we should not fret about it much. We will still give them a green star here. Few other important info to note about the fund is that it is majorly a large cap oriented fund with 65% allocation to it. And this table shows rupees 10,000 SIP would have performed in various time frames and prove how the exceptional performance this fund has given continuously, especially in long term. So if we calculate, we got total 5 green stars and 5 yellow stars with last year fund performance and highly skewed portfolio towards financial and energy sector being the biggest concern. To summarize, Axis Long-Term Equity Fund is a balanced fund in the ELSS category. This fund has outperformed its benchmark and category in 6 out of 7 calendar years since launch. While selecting stocks, the fund looks for superior and scalable business, a high return on capital and secular growth. The fund is large cap oriented as compared to its peers. In the last 1 year, large cap weights have been at around 65 to 70% and rest has been mid caps. Consistent performance has led to the fund seeing its asset size burgeoning from a mere 4 crore at the launch to over 11,000 crores now. The fund, being a late entrant, hasn't really been tested in severe market meltdown of 2008, but its performance in 2011 however showed that it is able to contain losses in a falling market. Since 2015, there has been a shift in the market cycle in favor of cyclical and beaten down stocks and sectors. These do not usually figure in the fund's buy list, and this could have slowed its 1 year performance. Overall, we believe this fund is in safe pair of hands and has very high focus from fund house due to its sheer size and share in their asset under management. This is all we have on this funds review. If you have any question, please do write in the comment section below. Have a great day ahead.